Our next guest recently lowered his price target for Tesla as he forecasts modest volume growth in 2024 amid a slowdown in global EV demand. He's bullish, though, long term, and thinks that the company will maintain a lead as the world makes the transition eventually to electric vehicles. Let's bring in Dan Levy, senior autos analyst at Barclays. Dan, it's good to talk to you today. You expect a big shift here where demand is driving the volume rather than production, right?
Yeah, that's right. And this is really the first time that we're seeing this in Tesla's history, that historically volumes for the company have been defined purely by their production capabilities. And we started to see it last year where really that shifted to more of a demand constraint. Even on Elon's own admission, finally on the 3Q call, saying, hey, we're not going to go all out in the Austin and Berlin facilities given some of the macro uncertainty. And so it's really this more challenged macro backdrop and challenged fundamentals that's really the backdrop into the 4Q call that we have this evening.
How much do you think that the Hertz sell-off of its, a portion of its electric vehicle fleet is going to give competition to what Tesla is trying to do in terms of selling cars?
Well, the Hertz sale of some of their EVs is just a reminder of some of the demand challenges we have in the broader EV market. That Hertz was part of the EV excitement a couple years ago when they said they were ramping up on EVs and EV in their fleet, and that hasn't worked out very well. And the fact that you have Hertz selling more EVs into the market, and just another indicator that from a demand perspective, EVs are facing some challenges, right? The fact that we've gone from the early adopters to the early majority, and that's been a bit of a challenge. The fact that you're selling into a market where there are some subsidies rolling off in different regions. And so I think it's important to acknowledge that there is some EV demand softness right now, even if over the long term you still have upward penetration and growth in the numbers.
Does that softness in demand explain why you expect them to come in short of the consensus of 2.1 million units next year?
Yeah, we're at 2 million units, and really there's a couple of things driving that. One, as you know, Tyler, the underlying demand softness, and that it is tricky to sell vehicles into this type of a market. The other piece that you have is what is their willingness to sell given the pricing backdrop that we've actually seen them. If you just contrast a year ago, Elon said, we'll sell cars at zero profit. That's not the case anymore. They're showing some margin sensitivity, and they haven't been cutting prices as aggressively as they were early last year. So they're trying to set some floor on the margins, and you combine that with the fact that this year, really, all you're selling is incrementally Model 3 and Ys. It's a saturated lineup. Model Y is already the world's best-selling vehicle. Cybertruck really isn't contributing much to the volume growth this year. That, I think, underscores our below-consensus view on the volume.
Matheson's law says that I will buy a car right before they introduce massive price cuts. And that's what I did. So, okay, there we go. Got that out there. I'm not angry. I'm not bitter. It's okay.
But speaking of price cuts, this is part of what appears to be the new strategy, right, Phil? I mean, if they're talking about the leak over the cheaper models and everything, this is something that Elon Musk has been talking about as a strategy for the future. Why hasn't it already happened?
Well, you've got to drive down the cost, Contessa. It's easier said than done with electric vehicles. Look, they came out with a lower-priced battery pack with the LFP formula for the battery, and all of the automakers, when it comes to electric vehicles, are doing that. That said, the cost of building an electric vehicle is still high relative to a traditional internal combustion engine vehicle. Now, they've been driving down the cost. The key is, can you drive it down low enough that you can make, let's say, a sub-$30,000 EV and be profitable doing it? That's the challenge here. So, yes, Elon Musk has said, you get it down under there, then it becomes one of these things where it really starts to take off around the world. You add in robotaxis, and that's part of his long-term vision for the company. But the challenge is bringing down those costs. And by the way, this is not just a challenge for Tesla. It's all automakers. EVs are still an expensive vehicle to build.
Dan, I want to squeeze in one more quick question. Tom Narayan last hour said robotaxis are going to be a big hunk of Tesla's future, going to be the driver of Tesla's future. You agree with that? Quickly.
Certainly, the opportunity for more advanced stages of autonomous driving play into the opportunity, certainly priced into the stock. We take a more, I would say, cautious view on the rollout of those capabilities. Right now, as much as we talk about full self-drive, it's really a level 2+ advanced driver assist system that they're selling.
All right. Dan Levy, thank you. And Phil LeBeau, thank you as well.